The wild stock market is giving a lot of people a headache. It's moving so fast. We have Julianne Niemann, Executive President at Smith Moore in St. Louis, on the line with us today. Hello, Julie. What's your take on the market mania?
So the medical facts are the worst is yet to come. The first line of defenders, police, firemen, ambulance drivers, people that happen to be in grocery stores and urgent shopping areas still do not have enough protection, and they're getting the coronavirus now. So that's becoming a huge problem. So this is a long ways from being over. So with the facts, you've got to realize a couple of things. We've had a wonderful rally in the market, up almost 15%. Take advantage of it. So it's time to stop hoping and to start coping. Once again, what do you do with your portfolio and your finances? First of all, take a look at your portfolio, especially the retirement portfolio. Make sure that you are in good quality conservative things, namely bonds. You have to be in a fairly good diversified bond portfolio. Junk bonds, not the ones to take a look at this point in time, because there's recession can get considerably worse before it gets better. And there are going to be companies that are going bankrupt, those that are getting allowances to postpone payment, but are going to have a tough time recovering anyway. So quality is a real key thing. As far as the stocks go, this is no time to play any kind of a game. If you're in a straight index, you're going to swing with the good times and with the bad times. That's the concern about it. Now, everybody says the market always comes back. Well, hopefully it will within our lifetimes. This is the time to be very specific what areas you want to be. The best place to be are in companies that have good cash flow, good balance sheets, mutual funds that basically have those kinds of stocks in them. That's what makes sense at this point in time for longer term recovery. But this is going to be longer term than anybody was expecting. This is not going to be a V-shaped return in the stock market. This is going to be a lot of fits and starts.
Julie, what else can you tell us before you take off?
From a personal standpoint, make sure you have sufficient cash on hand. But put this in very short-term things like a certificate deposit money market fund, and you should be looking at 6 months' worth of expenses now. If you don't have that 6 months worth of expenses, really look at cutting back your spending considerably and start taking a look at alternative sources of funds, possibly getting a line of credit, taking a mortgage out on the house. It really depends on what your finances are like. But get very serious about your finances, because the support from Washington is going to be very, very spotty. Lots of promises, but things have not been delivered yet, and people are hurting. So stop hoping and start coping. That's the key behind your recovery to this.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.